Microsoft Stock, ticker symbol MSFT. They released earnings earlier this week and went down roughly 7 to 8% in stock price, while they beat in both EPS and revenue by a small margin. For the next earnings, all 27 analysts voted a miss for Microsoft. So what happened, and does this mean Microsoft stock is still a buy? Well, in this video I'm going to show you real quickly what Microsoft does, and the earnings, the historical returns, the fundamental analysis, dividends, and in the last part I'm giving you my price target to see if they are a buy or not. And I think you definitely want to see that part, so make sure to watch until the end. And I'm also very excited to see what you guys think about the stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So, what does Microsoft do? Microsoft develops and licenses consumer and enterprise software. It is known for its Windows operating systems and Office productivity suite. The company is organized into three equally sized broad segments: productivity and business processes, intelligent cloud, and more personal computing. If we dive in the quarterly report, we see a lot of interesting things. Productivity and business processes, the second largest segment, is up 9% year over year. CC growth is at 15%. CC is an abbreviation for constant currency, which of course had a big impact on Microsoft's revenue. Intelligent cloud, the biggest segment, is up 20% year over year. CC growth is at 26%, which is really insane. More personal computing, the smallest segment, is flat year over year, and CC growth is at only 3%, so this isn't very spectacular to be honest. But the other two segments are growing in high amounts, and in total revenue is up 11% year over year, and CC growth is at 16%. Gross margin is up 9% and 16% in CC growth year over year. But gross margin percentage is down 1% to 69%. Meaning operating income is only up 6% year over year, or 15% in CC growth. Operating income percentage is down 2%. Net income is at 17.6 billion and down 40% year over year, or down 8% in constant currency growth. So that doesn't look very good to be honest, and this was also one of the reasons why the stock went down. Revenue is up, but net income is down. Diluted earnings per share is at 2.35 and down 13% year over year and down 7% in constant currency growth. Office Commercial and Office Consumer are both up 7% year over year, and LinkedIn revenue increased 17%, which looks pretty good to me, especially since we see that Google and Meta are having problems with advertising revenue. Server products and cloud services revenue increased 22%, or 28% in constant currency growth, driven by Azure, up 35% year over year and up 42% in constant currency growth. Windows original equipment manufactured revenue decreased 15%, which is of course not so good. Xbox decreased 3% as well. Azure is still growing in high amounts, but we see that revenue starts to slow down a little bit. So this is something to keep your eye on. But 35% growth is still high, of course. The last thing that I want to discuss is the outlook for the next quarter. And this doesn't look that good either. Microsoft expects a decrease to total revenue growth of approximately 5 points. Operating income margins to decrease roughly 1% year over year. And this was also one of the reasons why the stock went down. So what does the current results and outlook mean for Microsoft? Is this stock still a buy? Before we dive into the fundamentals and the price targets, I want to show you the historical returns of Microsoft stock. I decided to include the S&P 500 as a benchmark, since this is one of the easiest ways to invest. Just buy an S&P 500 ETF and wait. Since it's really hard to come up with competitors for Microsoft because they are very diversified in terms of business, I decided to include Apple, Oracle, and Alphabet, ticker symbol Google, as their competitors. On the 5-year chart we see an almost 200% return for Microsoft stock, including dividends. And they have beaten the S&P 500 by a big margin. The S&P 500 is up 65%, and Apple stock is up 293%. Oracle did similar returns versus the S&P 500 with 65%. and Google is at almost 19% return. On a 1-year chart, it's quite the opposite situation. Microsoft stock returned minus 26%, while the S&P 500 returned only minus 13%. Apple stock is nearly flat, and Oracle stock returned minus 18%. Google did the most worst in this list of them all, with a minus 33% return. On the 6-month chart, we see a minus 18% return for Microsoft stock, while the S&P 500 is at minus 8% return. Apple is at minus 5% and Oracle is nearly flat. Google returned minus 19%. On the 1-month chart, most stocks are trading sideways. Microsoft returned minus 2%, the S&P 500 returned 5%, Apple 4%, and Oracle returned 22%. Google returned minus 4%. So on the 5-year chart, Microsoft did very well, but in the most recent periods it wasn't the best performance for the stock. So does this mean that Microsoft stock could be a buy right now? Let's check the fundamentals of this stock to see the valuation. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe and in return you receive similar analysis to this one every week. Let's continue by diving into the fundamentals. Microsoft is a 1.76 trillion market cap company, which makes them one of the largest companies in the world based on market cap. PE ratio sits at 25, which could indicate that they are slightly overvalued. But keep in mind that PE ratio is only one number to value a stock. And of course there are more fundamentals that will decide whether or not this stock is undervalued or overvalued. Later in this video I will show you my 3 price targets for Microsoft, so make sure to watch until the end. Trailing 12-month revenue is at 203 billion, which is an insane amount of money. And in this graph we see that revenue went up really nice and steady, which is pretty impressive since Microsoft is already one of the biggest companies in the world. So double-digit growth is something that I think is really awesome. Net income sits at 69 billion, which gives us a profit margin of 34.4%, which is higher than the 5-year average. So I do like to see this growth in margins. But keep in mind that for the upcoming quarter, margins are expected to decrease a bit. In this graph we see the earnings per share, or EPS. It's up quite a lot over the long run, but it's not always steady and consistent. And keep in mind that it's decreasing in the latest quarterly results, and probably in the upcoming quarter as well. In this graph we see the price to sales ratio. You want this number to be below 2, but over a longer period of time it's increasing quite a lot, which is something that I don't like, of course. Right now it's sitting at 8, which is too high in my opinion. But keep in mind, companies like Microsoft tend to have a higher price to sales ratio, so I'm not worried that much. And it's basically the same story with the price to book ratio. It's too high right now, but companies like Microsoft tend to have higher ratios. So keep an eye on this number, but for now not a big red flag to me. And it's also the same story with the price to free cash flow. You want this number to be around 20, but right now it's at almost 28. So this is too high. But keep in mind that companies in this industry have higher ratios here as well. Analysts expect a mid to high double-digit growth in EPS for the coming years, which is something that I really like to see. And it's roughly the same story with the revenue growth. Low to mid double-digit growth in revenue. So this comforts me a lot. Return on assets is at 13.8% and looks all good to me since it's above the 10% minimum. Return on equity sits at 42%, which is also looking really good. And the most important number here, return on invested capital, is at 23.6%, which is really good. Especially since it's above the 5-year average of 18%, so this looks really good to me. Microsoft has a current ratio of 1.84, which looks really good again. I want this number to be below 2. Current ratio can be defined as a liquidity ratio that measures a company's ability to pay short-term obligations, so they do a great job here. Another thing that I really like is the fact that all debt can be paid off right now, which is pretty impressive. Microsoft has 107 billion in total cash and total debt is at 77 billion. Again, this looks really good to me. And it's very important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares, pay dividends, do acquisitions and research and development. All very important for Microsoft. And in this graph we see that free cash flow is up quite nice and steady, so this looks all good to me. In the past 5 years, Microsoft bought back roughly 3% of the shares outstanding, which is in my opinion pretty nice. You don't want them to buy back overvalued shares, so I wouldn't like to see a double-digit number here. And 3% is pretty good in my opinion. This will increase the EPS, lowers the PE ratio, and makes it easier to maintain and increase the dividends. So when this stock keeps falling in stock price, you want the company to buy back more and more shares. Next up are the dividends. Dividend yield sits at 1.15% right now, which isn't the highest of course. Annual payout is at $2.72. Payout ratio is at only 27%, so this looks really good. They have 73% left in cash to pay down debt, buy back shares, do acquisitions and all other things. The 5-year growth rate sits at 9.7% and I wouldn't mind to see a higher number here. I think I would prefer mid-double digits for the 5-year growth rate. Microsoft grew the dividends for 17 years in a row, which is pretty impressive. Overall, the dividend looks really healthy, but it's not the most attractive one in terms of dividend yield. And now we have come to the point to see if Microsoft stock is a buy. So let's check the 3 price targets that I created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with revenue growth. I expect things to slow down a little bit versus the 1 and 5 year average, and I'm focusing on the 10-year average and the analysis estimates. So I'm filling in 10, 11 and 12%. Profit margin is decreasing a tiny bit in the short term, but keep in mind that in the long term margins are increasing quite steady. So I'm filling in 28, 31 and 34%. Free cash flow margin I'm filling in 30, 31 and 32%, so this looks really steady to me. PE ratio is at 25 right now, which might be a little bit too high, so I'm filling in 18, 19 and 20. It's the same story with the price to free cash flow. My desired annual return is 12.5%, since I can get an easy 10% average annual return with owning an ETF. Right now Microsoft stock is at $235 a share. I hit analyze and we see only a few green numbers. We have a low price target of $176 to $189, a mid price target of $217 and a high price target of $250 to $266. So this price target is down quite a bit versus my last video on Microsoft. Microsoft is a buy based on the high numbers. But according to the low and mid price target, Microsoft stock is a sell. Right now I think the mid to high price target is the most justified here. So there's some potential, but I think I would prefer a decrease in stock price right now to have a bigger margin of safety. My final conclusion is that I really like the business and most part of the stock as well. Right now you pay a small premium for the stock, but keep in mind that it's one of the largest companies in the world growing in double-digit numbers. So maybe it's worth the premium price. Microsoft is one of the larger investments in my portfolio. And when the price keeps falling, I think I will buy more shares of this stock since it's one of my favorite stocks. But remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.